Hey everyone, Laz here at the trading desk just for a midday update. Markets absorbing today's gap down, a little bit of scare overnight, not to be totally unexpected. As we approach the end of the day here on Friday, I expect and anticipate markets to remain relatively flat. Most of the technical damage was early this morning. We rallied back up, as in all chaotic markets. You know, you can't expect that a headline-driven event like last night with J.P. Morgan's, trading losses would drive the market down. A lot of times it's by the news type of event, which is what you're seeing here. Some of the banks, ability to kind of come off the lows. Let's take a look here. We're going to look at the spiders. The S&Ps here on the chart. You can see that, we're still under this key trend line that I'm watching. Over the last week, this is a 60-minute chart. I'll make it a little bit bigger. Lots of chaos. Look at all the red and green and up and down. Not a real trending market here. If I actually take my candlesticks away, you can see my key moving average, especially my 21 here, flat as can be. When I have a flat 21, generally to me, it tells me that this is a market that is going to give you a lot of back and forth, and you want to sell the pops and buy the drops, and that's exactly what I looked to do this morning. I'll put the candlesticks back in here. So I was selling short up here into the 36.50 area in the spiders, and you can see starting to work their way down a little bit. But my expectation today is that we're going to continue in this contraction phase. We had a nice expansion phase. You can see earlier, about a week ago, we really broke down. Now we're contracting. After expansion comes contraction, and that's essentially what this market's doing. So this gap down this morning was bought, creating more of that volatility trade that we're seeing. Let's go back and take a look at Apple here. Again, another key benchmark stock in this contraction phase. I'll remove some of these annotations, but again, 60-minute chart here, just getting a good hourly look, a couple days of price action here. A lot of back and forth, a lot of ups and downs, not really directional. Again, our 21 is flat. It's telling us a story here. Apple's not trading well. It's not trading strong. I am anticipating lower prices, and I am looking for, like I said, today's gap down. It rallied up pretty hard. We can look at a 5-minute chart, got that quick impulse. But again, because we're not really in a directional trade, all these quick impulsive moves eventually, get sold back down. So I expect into the afternoon, you're going to see a lot of, back and forth, non-directional, non-committed trading opportunity. I am looking at today as an opportunity to position myself into a couple shorts on some longer time frame charts. I put on a little Chipotle up here at 412. I put on some spiders to the short side. So I am nimbly carving out some tier 1 positions. I'm using this short-term strength here in a week tape as an opportunity to get myself involved in some bounces in some of these symbols. As far as the banks go, let's take a look at JP. Here's JP Morgan. Gapping down this morning pretty substantially off the news. You can see we closed around 40.5 yesterday, gapping down to around 37 this morning. Did see some buying come off, fairly early into the morning. It found support around 36.75 and rallied back to 38, but nothing real substantial here in terms of, real impulse or a lot of strength. It is a broken chart on the daily. If I flip over to the daily chart, we are now way off our averages down here into prior support over the left. Big volume, but again, not seeing a real desire to bring this stock back higher. So we could see these stocks base down here for a couple of weeks and absorb some of this downside, as we do have a broken technical chart here, and this is going to only resolve itself at this point with time and nothing else. So I'm staying away from some of the banks. Also Goldman Sachs I'll bring up here. Stretching here off the 21, which has been resistance. You can see here, and I've talked about this in the morning call. We look at the 21 here, way off the 21, tailing up. Goldman showing a little more resilience than maybe JP and some of the other banks. The only other bank that I think is worth looking at is Wells Fargo. Wells Fargo here on the daily, really been in a very, very tight basing pattern since early March. Really 2 full months, very tight range from 32.5 to roughly 34.5, and continues to remain. So absorbing this downside news in the banks, Wells Fargo's really bucking the trend there. Something to watch for leadership if the banks do start to turn up. So nothing more to report here. Pretty slow day. We saw a good snapback off of the gap down this morning, but at this point it's really a push-pull tug-of-war trade, and I wouldn't look to do anything at this point for the remainder of the day unless you're using some of the short-term strength to put on some positions with longer-term durations. Have a great weekend, everyone.